Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo, party. Da-na-na-na-na-na-na-na-na-na. Woohoo. It is, where are we here today? Today is Tuesday, if I'm not mistaken. Actually, here, let me make sure I have all the correct chat rooms open so I'm not bobbing my head left and right here like a chicken on a chicken. Where are we? YouTube page. Where's that? There it is over there. I know we have a YouTube sort of live stream now, and I know there are some people over there. Hey, look, there's 5 people over there. Woohoo! All right, so we got that at least on the screen. All right, couple minutes past 9 o'clock. I suppose as time goes by, I'll get better and better starting this on time. But anyway, I hope you enjoy the frivolity. Chris been doing a fantastic job putting stuff together. I think he, along with some guidance from other team members, have been working away on these shorts. I haven't really seen any online yet, so I'll be keeping an eye out for those. I hope these 30-minute broadcasts are of some benefit. Please feel free to leave comments, suggestions, how we can make it better. I know sometimes too I get a little too sort of ranty, so I try to refrain from doing that in these 30 minutes. I already show, that's where we can just sort of blab on endlessly. Yesterday, of course, we had Sjord from our TRI CTO. We're doing a big migration from this silly chat service that some clown got us to join up for a few years ago, this Rocket Chat. And I don't see anybody else on the internet and using this. So thank heavens we're leaving that nightmare of a story. But Stuart is super busy migrating us over to Discord. So I suppose there are some people that like that or dislike it, whatever. I'm not going to open up that can of worms. Point is that he is very busy, and any site members who are going to find maybe a little bit of stickiness with the communication and stuff, hopefully it'll get a lot more clearer and easier to use, especially on things like mobile phones and stuff like that going forward. So super excited for that. We're in this funny market state right now. We are going through sort of the January barometer kind of reporting. And on balance, it looks like the market's going to be relatively happy through 2023. At the same time, too, up and down like a you-know-what. So never a dull moment. And I do find it fascinating how, I've said this repeatedly, crypto is actually a fantastic leading indicator. And I do see crypto's looking a little waffly up top here. The breadth indicator, this particular trading plan that I have running, had me hop off of longs there a week or two ago. And I've just been sort of sitting. I think the way that I'm just going to trade this particular plan is I'm just going to take the long signals. When it's flashing short signals, I'll just sit in cash or the cash equivalent. But for the time being, I'm just sitting on the sidelines with regard to that trading plan. And I got to say, I did have another demonstration trade of a bot set up off of a lower time frame chart, and it's looking a little dangerous right now. But nonetheless, that's the whole point of trading setups is you don't really know exactly what's going to happen. You just got to make darn sure that when you're right, you get paid substantially more than when you're wrong. And, ironically enough, the old floor traders, they're just looking for like 55% win rate. If you get paid 2 to 1, 3 to 1 on the trades, well, definitely makes it worthwhile. And actually, it was interesting. Chris and I, of course, also do it. Like I run a number of different trading plans. So Chris and I also are working away on an opening range trade setup plan. And it looks like that's running at about 50-55%, but when the winners win, holy moly, they can be big. So anyway, lots of fun in the market, but it is a weird kind of period with the end of January coming up here. January barometer, what's the year going to look like? And of course, everybody's humming and hawing about what the heck's going to happen with sort of short-term interest rates. We're finally coming into the end of this tightening cycle. And as we see in the news later on, one of the sort of G7 countries, I don't know, G7, G8, Canada has actually formally announced that they have come to the end of their interest rate hiking cycle. Well, I don't know. I don't think that that's a good idea. You never really should like broadcast, this is it, because then the market ends up making it look like an idiot. And, I hate to say it, but the Bank of Canada governor, he has been made to look like an absolute fool since this whole COVID market nonsense and their great prognostication that inflation was transitory, when of course that was completely and utterly wrong. But then you have to ask yourself, well, maybe they actually, because keep in mind, they're not elected officials and they really have nobody to answer to other than private shareholders of the banks, of course, that the public is not privy to. So maybe that was their plan all along. And that's sort of the camp that I fall into. But anyway, so bottom line here is got kind of a mixed message from the breadth indicator. We're kind of just waffling right around the 50 line with a bit of a negative bias. And it was actually interesting. What are the drivers? I don't think they're really econ drivers right now. Fed's gone into quiet mode, and about a week or two before Fed announcements, next big FOMC meeting is actually exactly 1 week from today. Usually around those dates, they want to be very quiet and they don't really want to comment too much when we're in sort of that week prior to that meeting. So we're not hearing a lot of Fed speak out of the states driving the market. It's more sort of earnings related. And so this sort of scuttlebutt of du jour, and I kind of like to use this website. It's kind of it's a nice resource. I would ideally like to get market carpets on the TRI site going forward, but Sjord can only do so many jobs at once. But so we'll just use this in the interim. You can see indexes are all down. And actually, they've come off substantially off of the lows. First thing this morning, the markets were just tanking. But the scuttlebutt is, of course, I think specifically Microsoft had earnings, and Microsoft stock kind of got beat up here a little bit today on that. But, down 0.5%. That's not really anything to get too excited about. Interesting. Google down 3%. That's, in historical terms, we always used to say anything greater than 2% move, especially on the big indexes, is noteworthy. High beta, I suppose, something like 5% is probably the threshold to really get somebody's attention. But you can see it's a bit of a down day. And I think the downness is more related to sort of misses on the earnings front. January 24th, after the market yesterday evening, you can see Microsoft did report. They actually opened up substantially lower this morning, but you can see they're clawing their way back here as we speak. So a little bit of earnings. I think we have IBM, and if I'm not mistaken, I think like Tesla and stuff coming up here shortly. So that's what the market's probably going to be dominated over the next day or two. The question really I have is this really actually a new start of a new trend, or did maybe just things get a little bit ahead of themselves in the market? As I said there earlier, we are watching, of course, at least I am, watching January barometers and trying to get a feel for what assets kind of want to do through the year. First week, a big down, then up into the middle, then kind of an M out, then a dump into the latter part or second half of the year, if you will, then a big rally. It's interesting hearing the Bank of Canada when they made their comments following their Fed policy, or not Fed, but Canadian Fed, if you will. Their policy statement, I thought it was interesting. And I think on balance, if anything, Canada is probably going to be worse than the United States because it is a commodity nation, even though substitute drama teachers would like us dearly not to be a commodity nation anymore. I think that's kind of asking a bit much. But anyway, short-term inflation expectations remain elevated, projected to come down significantly later in the year. And I do like that idea. If this crude market and the energy markets calm down, I think we'll start to see the year-over-year comparisons flatten out. In the meantime, the bank estimates that the Canadian economy grew by 3.6% in 2022, but is likely to stall through the middle of the current year before growth picks up again in the second half. And I get the impression that's sort of the message that we're sort of getting out of North America. And that's kind of what this was that we're going to have a bit of a tough slog here the second half, kind of halfway through the year. And then I wouldn't be surprised into the end of the year, sort of thinking, what does 2024 look like? We actually have a pretty big rally. I also noticed too that North American currencies kind of getting beat up here a little bit. And the Europeans have come out recently and said things like, we're going to start raising our interest rates and we're going to start normalizing interest rate policy. So does that mean we're going to see a big spat of a European currency strength here going forward relative to the North Americans? We'll see what the Americans say, of course, through the FOMC meeting. My hunch is that the Canadian market, and it's actually interesting, talking currencies, you can see the very noticeable triple top, almost like a head and shoulders top firing here on those statements from the Bank of Canada, basically saying that, no further pay raises from the Bank of Canada. And actually, I did find it interesting. I went and bought some money market yesterday in Canada. And yes, the bank itself, Bank of Canada, is paying 4.5%. But the money markets, they're only giving you about 3.5%. So they're still trying to screw the Joe Sixpack over. It's remarkable how crooked this whole system is. But anyway, I suppose we're not supposed to talk about those kind of things on these quick 30-minute videos. So obviously, we've got a whole bunch of Fed policy coming up here and banker policy. You can see it kind of. I actually like how they use the Bank of Canada as kind of like a telegraph of North American rates because it comes a little bit ahead of the Americans. I wouldn't be surprised if you hear a similar message out of the Chair Powell and all those crazy clowns. Interesting how commodity prices, though, are catching a bit of a bid here right out of the gate. Actually, this morning we had a fun trade in the gold. It spat up a nice win for the opening range. Crude just gave us a scratch trade, and then the good old stock market. And I'm still have a very jaundiced eye over this 630 retail opening range trade, but that's the whole point of going through the process of vetting these setups is I'm not overly impressed with this retail opening range trade. I don't think it's producing the results that we were looking for. So anyway, point here is basically a scratch trade. Nice win on the gold. Crude was a scratch. Stock market was a loser. End result, scratch trade on the day. January barometer, we talked a little bit about that, sort of humming along here. I think, kind of the first week, you see all this crazy ass back and forth. I think that's basically what we're going through now. Crazy ass back and forth. If anything, I get the impression that actually they're a little bit more optimistic than they were through the first week. We didn't pull back all the way against the lows that I would have thought we would have. But hey, we're still young. And of course, here is the end of the month and that big FOMC meeting. So anything can happen in this window. And you can see if I just draw this really simple trend line here and then this simple trend line here, key support for this market if we lose this really fast little trend line in here. Key support is down in this area, and that would look a lot like the first week. So we'll see what happens. You might find we get a big thumping and then a big rally into the Fed. And of course, as I said before, it'll be, we'll do the live broadcast on the Fed FOMC announcement day. That's always fun, and just sit and chit chat about what we see happening with price. Of course, we're not supposed to trust the first hour following the Fed announcement. So it's always fun to watch the insane volatility. So we'll be looking forward to that. But I wouldn't be surprised if the market rallies into that Fed, kind of like this end of the first week. And then they usually say that that's not a good thing. You don't really want to see the market rally into the Fed because then it's like buy the rumor and then it becomes sell the news on the other side. So anyway, we'll keep an eye out for all that going forward. Who do we have on today on the after party? It's Wednesday. Wednesdays and Fridays we have special guests on the after party. Who is it today, Chris?
Got Sharky coming up today.
Ooh,
Sharktoshi.
Sharktoshi, our sort of resident level 1 TA who recently graduated to level 2 instructor status. I think he actually is doing both jobs right now. Way to go, Sharky. And I think it's like a big presentation on setting yourself up for positive mental attitude. Hey, maybe I should
That's
take
right.
his course.
Yep, yep.
Anyway, so should have a fun conversation with Sharky here in about 20 minutes. We had our stock pickers club meeting last night. Always fun to hang out with them. A few stories, a couple, obviously technical charts. Brian's going to be interested in double bottoms, of course, especially at the bottom of trading ranges. I mean, look at that chart. That's basically everything that we try and teach you guys to try and hunt for. Now we're basically right down at the bottom end of the range. Good old reload zones. And then notice what letter of the alphabet. And this is cool. I like when I see this. Keep in mind, this is a weekly price chart, so fairly longer term. I'd like to see a little bit more buying pressure on the breakout here, but nice little, somewhat railroad tracky lows. And actually, I even saw Bitcoin did this on an intraday basis and acted as a pretty good floor there the other day. Rallied up, came right back down, tested these lows, and then actually gapped violently higher. So we might have to come back down and revisit that gap in that February, March sort of sell-off that I'm looking for. But the point here is that is a double bottom. And if you go on the clothesline basis, we'll see how this week finishes. But clothesline people, they'll probably be paying attention to see whether we get that breakout there or not. So very interesting looking stock. And of course, huge, huge dump. Probably that is your technical objective. That we've looked at this one before, and I did buy a call option. This was, of course, you remember there was a big Chinese hedge fund that blew up, and this was one of their big holdings. And they had to just liquidate the Chinese hedge fund. That was remember when China was actually a thing in this world? What a joke! I tell you, don't trust those goddamn totalitarian dictatorships. They will steal your money in a heartbeat, and I think they just China the whole damn world. But I do hear, hey, they're opening back up, and they don't give a fur about sicknesses now. Hey, it's free for all for everybody. And of course, oh God, it's going to turn into a nightmare here. Anyway, so if you are in the market for a cheap stock that's at the bottom end of range, big blue chip names, this is sort of like a Hollywood kind of play. It's not a bad idea, I suppose. Do we get W's on other sides of trend lines? You might want to wait for another W, but pretty darn attractive trade location, that's for sure. And then sort of to that end, I think I talked to you guys about this before. Zach, our level 3 instructor, actually had a long spread trade set up, and he said that just even on the rally yesterday, that his option almost actually hit its double level, because you get a move like this in options land, and options can just go crazy. So congratulations, Zach. Nice pick. I just went and picked up 50 shares of this for my retirement account, because that's a pretty darn good looking bottom there. Could we swim around this area for a little bit? Sure. But, W's are W's are W's. There's that gap that you saw on Paramount. I wouldn't be surprised if the whole market has to come back down and swim against these lows into that February, March sort of window kind of thing. But not a bad looking bottom there. I'll tell you that much. Couple different names, and actually a name that nobody in the public is talking about at all anymore. Nobody. The cruise lines. And I'd have to say, the cruise lines, there's a bit of buying interest coming back in here. It's interesting how this one, I mean, look at where, I guess that's where it topped out there, right? So $72. You can see the gaping holes on the charts up top here. You notice that we came down and flirted with this low. You can see right down in here, little dip below, jump back above. You could see a lot of activity in here. So if we can actually reverse off this level, to me, this looks like a nice inverted head and shoulders, although this shoulder does look a little bit lower than that shoulder. But kind of these stocks are starting to look a bit cheap. I mean, just Mr. WD Gann would just simply say, what the heck's a 50% level? I'm not looking for a new 52-week high. Well, I don't know, 52-week high, maybe. Just looking for a revisit of the mean, just the middle of the range. And notice that just so happens to be horizontal support and resistance, that level there, that level there. So we would like trick out our charts, and this would be a huge magnet level. And lo and behold, like you probably heard me say repeatedly in the past, gaps like to be filled in. So look at the size of that gap right there. I mean, that's probably a stock that's good for $40, and here we are at $10. So I might do a little bit of bottom fishing in here. I wouldn't mind, I did buy a couple things here recently. So don't really want to, go too ape shit here on the long side right now. But through March, if we get any kind of pullbacks and then subsequent buy signals, this is a name I definitely could consider. And then kind of switching, before we jump into the metals, here's another one, basically right down at the bottom end of its range. And, if you've been following me over the years, this is my bread and butter. So I want to try and force myself to come in at the bottom end of the range. And what was interesting about this one is, you can see lower highs and lower lows, not really that exciting. We did try and pivot here. And last week, we actually put in a very rare candle pattern. This is an outside upside bullish engulfing bar that covers 2 previous weeks' data following a gap too. So this is what I like to call a key reversal bar. I don't know whether this is the bottom or not. I mean, we might need to swim around here a bit more. But, from a value guy, I got to look at something like this every day of the week. It's only $2 a share, and it used to be like $30 a share. So could we get a bounce back to 10, $15? I think so. I mean, the irony of it all is I show you guys this stuff in altcoin land and crypto. And of course, the regulators think that, altcoins or crypto are all insane speculative assets. No difference here. It's the exact same logic. So anyway, I went and picked up a little bit of that for my registered account recently, especially with a key reversal bar. I love key reversal bars. Then to sort of finish off this conversation, very interested in certain areas. Like I don't know whether I've done it in the public. I think I have, but last night we did spend some time looking at gold, trying to make the bullish case for gold going forward. The gold price itself, it's fairly elevated. But also too, we looked at stocks like Newmont Mining and how they acted through the 1980s. And I get the impression that we're probably going to repeat that kind of behavior. So a couple names for you to chew on. If you are an Allen fan, and of course, who in the world isn't, this is a name a few months ago. He came out and said he really liked this. And he also liked the idea of Tesla using this company for its mining reserves. Obviously they use a lot of metal. And I got to say, the price chart, and I even put a tweet out recently, Alan likes this stock and so do I. It's a good looking chart, it's a pretty solid floor here. Obviously there's no guarantees from the management, but, throw in a buck at something like this, and all we're going to do is just, we'll just do a 50% retracement of this range. We don't necessarily have to talk about the huge upside range, but look at that. I mean, that's $4.86. That's like a triple from where we are right now. Is it worth like throwing $1 at this thing, risking the dollar, and that dollar might turn into $3? It's not bad. It's a little bit less than a triple, but very realistic. And then, of course, if this thing really does get going, which I have a feeling it will down the road, especially with the way the gold market's acting, notice, 50% level is just nothing more than a revisit of that kilo. Remember, I did this on the other chart we were looking at, that key high there. So this is like a level 2 program concept that we teach people, tricking out your charts in horizontal support and resistance. And we see this in crypto all the time too. So it's really no different. So you can see the cluster sort of traffic area all right around the 50% level. And that is like a 10x of what we're doing here. 10x. Is that worth throwing $1 at? And if you win, you get $10. But if you lose $1. I mean, that's pretty smart investing, if you ask me. And then finally, and this is a really interesting one, is this is a name that one of our locals here in Canada found, and it is a gold miner. And you're not going to see this every day in your lives, folks. So pay attention. They come up with the drill results here. Now, the question here is, do you want to go and invest in Serbia? That's always a challenging question. But these numbers are insane. 40 meters. Just imagine, like, go. You're going to have to go out on the street and pace out 40 meters. It's that big. That is huge. 63 grams per ton. And they had one intersection. It was something like 2,100 grams per ton over like a meter or two. I mean, just insane numbers. Almost so insane that you couldn't believe it. But you can see how the stock reacted. In fact, they were doing like a fundamental write-up on this about a month or so ago. And then they came out with these drill results of this property. And you can see the stock is just launching itself higher. And believe it or not, and this is the same thing I showed you with Zugi's that FTX, I think it is. I can't remember. Anyway, we can talk about that later. I could very easily see that this is nothing more than a trading range. And if with these kind of numbers, these are monstrous numbers. Anybody who's in the mining industry, anybody who has any kind of mining background, post a comment in the video. What do you think? Do you often see these kind of numbers reported on drill results? Oh, geez, that's insane. So where does that actually take price? 40 some odd dollars a share. Usually these things actually end the runs at 877s, $87 a share. I could very easily see that. I mean, that was just an insane number. In the short term, if I'm just using this range, I'm going to try and sneak my way in off of this $7.89 level. Obviously, the market's perked up quite a bit here, but if anything, if I'm lucky through sort of February, March, I can get some sort of pullback here and sneak my way in, because wow, what a number. I couldn't believe that when I saw that yesterday. You just don't see that every day, folks. So anyway, that's a good old gnarly old mining prospector guy talk. For whatever it's worth, the industry standard used to be you have to see 3 grams per ton. So 63 grams per ton? Holy crap. Ticker on this thing is DPM. Anyway, it says right there, Dundee Precious Metals. Okay, let's see. What time is it here? 9:30. All right, so we should probably wind this up. General message out of today, as I sort of said with the January barometer, still waiting for the month end. If anything, heading through the fall, first week said that we were going to come right back down against the lows. We haven't actually done that. Had a pretty smart counter trend rally here just the past couple hours to get us out of trouble. Certainly not a buy signal there just yet. You can see the moving averages have actually crossed over negatively. And if anything, this is just dead cat bounce, and we probably want to see some W action here to break this M top. With regard to Bitcoin, it was interesting that we had this, it was a potential trade setup, bot setup. I mean, it was there. There's nothing really out of the ordinary. It was fascinating to watch how price really compressed into late yesterday, compressed. And you can see right at this moment, basically this market was ready to go. And I even put a tweet out. I was like, holy crap, look how tight this price action is getting. But they just couldn't push it up through these highs. Market just basically ran out of steam on this event. Probably even argue, a little bit of a bear div in there. The volume just wasn't really that impressive. We had M's in MACD, M's in RSI, M's in Willie, and sure enough, the price had to come back down. What I did find interesting, and of course, this was all on Microsoft earnings came out. They kind of disappointed. I think there was a couple other companies that came out. They weren't really happy with the earnings reports. And so the whole market came off. This is actually the reason why I like to have the 3 high and low method here, because you notice 1, 2, 3 higher lows. There's that railroad tracks reference I made earlier about Bitcoin. So we came back against those railroad tracks. Are we going to push up? Are we going to push up? The earnings came out for Microsoft. Oh, they're horrible. Sell everything off. Boom. Everything goes down. And notice they just blew out all these stops, blew out these guys, blew out these guys. But these guys, where we have our stop, is actually never got hit. And, this is a trader's life. I've seen this happen repeatedly in my career. I'm not touting this trade idea. I'm not shilling it. This was purely demonstration purposes only. Do we get stopped out? We might. And you'll notice that actually, I'm not going to change the order. I want to leave it as it is. If this gets stopped out at a loss, I'm actually just going to go short right on that event. So not only do I have my stop loss working, but just a couple bucks lower, I have a sell on stop order, because that's a big fat M, right? And we want to short M's. And if this thing does start to melt down, then you can see the bottom is a long way down. It would be something like there, down to there. There's my target, 19,827. So really all this is we call these the El Tangonators, where you get a whole bunch of bear divs, you get a big fat M in price, and a move back to the 50% rule is going to represent a better than 2-to-1 risk reward. It's just a trader's life. You just, if you trade, you trade. That's what you do. So this is basically what's going to happen here is I'm going to get, if, and I don't even know what the answer is, but if I do get stopped out because this low gets breached, then that turns into an M and I go from being long to being short. And I'll be gunning for this level here. And the irony of all of this is that we built this tool that's like, it's quite remarkable how accurate this damn thing is. And the breadth indicator looks like horse right now. So if anything, going short right here is actually the trade. So it is kind of interesting how the long ideas, they just didn't have any traction at all here. And now we might actually end up going short. So go figure. As I had said earlier, the purpose of this thing here, I'm just going to be trading the long signals. I won't take the short setups. I don't really have good short proxies that I'm comfortable with. So it's either I'm in cash or I'm long. That's the way I'm trading this bread signal. But, for demonstration purposes, this is a perfectly valid El Tangonator. And you can see the risk reward matrix. So it's quite literally either the current trade that I'm in works and I get a 3-to-1 on the setup, right? So that's that number there. Or the trade fails, I get stopped out and I'm going short. And then my target is the 50% level and that spits out a 2-to-1. And that's basically where I sit with crypto right now. I didn't really see anything significant moving in altcoin land. So kind of some up, some down. A little bummed at that Filecoin. It seems to be taking off on me, which is a little bit of a bummer. But you can see it's kind of a mixed bag in the space. So there's some up, there's some down. I also noticed too, Sjord was talking yesterday about having difficulties getting the DeFi fills on this RNDR. I think his order is still pending. I don't know what the hell that means. But anyway, long and short of it here, if this thing had to come back down to earth and clean itself up a little bit, would that be realistic? I actually think so. It's not, it wouldn't be unhealthy if we actually had a nice, just even 50% pullbacks. So just be prepared for maybe a little bit of consolidation here, folks. All it takes is, like I said, we're on the precipice where if somebody sneezes or says the wrong thing, in the broader market, you could actually see this stuff come off. So anyway, there's some levels for you to chew on going forward. All right. I think that's about all we wanted to say. Did I miss anything in particular that I was supposed to talk about here today, Chris?
I think you hit all marks there. Lots of
All
topics
right.
covered today.
Excellent. So let's head off and listen to the comic stylings of one Sharktoshi Nakamoto, Nakamagawan, and let's all get our PMA hats on and get schooled up on how we can set ourselves up for success as traders. So have yourselves a fantastic rest of your day. PMA for the win. Today is Wednesday, so we have our crypto show tonight with Paul and Ben, and look forward to Julian's offering first thing tomorrow morning. All right, have yourselves a great day. All the best. The only thing left for Brian to say is bye for now.